There's always a delay.
Oh,
Oops. Okay.
All right, I think we're live.
Oh, hi everybody, and welcome to our UFile Facebook Live session. My name is Ida Celli, and I'm here with our, not guest, but our tax expert, Jerry Vidaradas. Hi, Jerry, how are you?
Not bad, Ida. Guest. I think I work for the company. I think, but I'm not
Do
sure.
You? Well,
all right.
So you're here today to answer all tax questions that our guests will have.
Yep.
As a matter of fact, why don't you remind everybody what the tax deadline is this year to file your return?
Okay, so the tax deadline is April 30th, like it always is. Okay, so the government did not extend the deadline, at least on the federal side. It was not extended for the rest of Canada. For Quebec, we just got news today that they've, although officially not extended, they're turning the other way and saying, look, you could wait till May 30th if you want to file your return for the Quebec return. But on the federal side, it's April 30th. Now, the good news is that if, for example, you owe money and you received benefits related to COVID, meaning the CERB or the CRB or employment insurance related to COVID, then you have an interest holiday, meaning you don't have to pay your balance owing right away. You have to pay your balance owing right away, and you have till April 30th of next year to be able to pay off your amount owing. Okay, so that's the good news there. But remember that the deadline is for the interest, not the interest, excuse me, the penalty, meaning that you are not exempt from paying a penalty. Okay, you will pay a penalty if you're late filing and you owe money. Okay, you will pay a penalty, but they will, they will alleviate the interest charges as long as you receive benefits, COVID-related benefits during the year.
Okay, and who are exempt? You said only people who receive the COVID benefits?
Exactly. So if you have a balance owing and you receive the COVID-related benefits, meaning CERB or CRB, then you have what's called an interest holiday, meaning you still have to pay your amount owing. It's just that you have a year to pay it without getting charged interest. So you have till April 30th of next year to pay off your balance owing.
Okay. So now we have questions. Let's start by Fatme. He's made a mistake in my file for the first time. I need to send back part of mine and my husband's return to the CRA. How should I report the T1 adjustment?
So you have two options as far as the T1 adjustment. Okay, you could either do it through UFile, which we have a section for the T1 adjustment, but then it would be a paper return. Okay, it basically be a paper adjustment, and you have to mail it to the CRA, and that could take a long time before the CRA processes that adjustment. Or you could go to the My Account portal on the CRA website and just produce your adjustment there. Okay, so you could do it directly in the My Account website. It's quick, it's easy. They simply show you two columns where they ask you what was the amount that you declared before and what's the new amount you're declaring. You put your justifications and then you send it electronically. That would be the way I would suggest for you to do it, Fatme. But again, you have the option. Either you file through the specific section of the T180J or go to the My Account portal of the CRA. If you're not signed up for it, it is super easy to do. You simply log in with your bank credentials. You can even use your bank credentials essentially to log in. They'll send you a code by mail, okay, a confirmation code within a couple of days, and then you just sign up and you can do your adjustment.
Okay. I answered back to Tammy via message. I just want to let you know, Tammy, send an email to the support team because that's a technical question, and then provide me the request number and the your email in a private message, and I'll follow up for you on that. Okay. Next question by Marcella Gomez. Hi, Marcella. Thank you for assisting. So your question here is: I worked as a self-employed with delivering food, such as Uber. I bought a car in August 2020. May I apply for CCA credits in the section of motor vehicle expense?
Yes, that's the only thing you could really. That's one of the expenses you can claim. For those of you who don't know what CCA is, the acronym means capital cost allowance, which in non-taxonees means depreciation. Okay, so you're basically depreciating the value of the vehicle. Okay, that becomes a deduction off of your net income for your business. Okay, so yes, you can, but just remember that your CCA will be prorated on the business mileage of your vehicle. Okay, meaning that if you use your vehicle for Uber about 20% of the time, then you're going to claim 20% of the CCA expense that you're deducting off of your business income. So that's essentially how that would work.
Okay, Prakash, I'm assuming your question was regarding to the deadline. Does the interest holiday apply to recipients of the CEWS?
I don't believe so, because the CEWS was something that your employer received and you were continuing to work. Okay, so your employer, basically, what the CEWS is, again, for those who are not aware of the acronym, is the Canada Emergency Wage Subsidy. So this wage subsidy was paid directly to your employer. Okay, and the way you'll know whether your employer received it or not is that you'll have special boxes on your T4 slip this year. It's going to be boxes 57, 58, 59, and 60. Okay, so those are included in your employment income. Those would not necessarily benefit from the interest holiday. We're talking really people who have received CERB and the CRB. So these are benefits because you were not working. Okay, if you received the emergency wage subsidy, that's your employer that received it, not you. Okay, and you were still working. Okay, so meaning you never lost your job. Okay, so therefore you would not fall under this interest holiday.
Okay, next question is from Janet Lobo. I have unused net capital losses from prior years. I have a gain in 2020. Where can I apply this loss on my UFile filing?
Okay, perfect. So what you would do is, okay, so let's go ahead. We'll do the share screening thing that we did before. So Ida, unfortunately, I'll have to hide you.
No problem.
And we'll do that now. So let me go ahead and share my screen with all of you. All right. So let me go back here. Sorry, everybody. And then we will do show in stream. And here we go. So now I am in UFile right now. So all of you are seeing it right now. So first things first, you have to make sure that the capital loss from prior years is there. Okay, is within your file. Now, if it's a capital loss you incurred this year, then it'll simply be deducted from your capital gain of the current year, and your net amount will be your capital gain or loss. But if you have a loss from previous year, which I believe was the question in this case, you have a loss from a previous year that you want to use against your 2020 capital gains, you have to make sure that the loss has been accounted for in the software, okay, in UFile. So if it's not currently in UFile, okay, then then you will go into the interview setup section here on the left-hand menu of UFile. You will tick the box in the bottom right section, the last section you see here in the bottom right. You'll have a section called carry forward amounts and prior year information. Tick the box next to losses of prior years and carrybacks. Click next at the bottom of the screen. On your left-hand menu over here, your left-hand navigator, you will notice a new section called losses of prior years and carrybacks. So that's what I'm clicking on right now. Okay, and then you will see a section here on the right called net capital losses of other years. Okay, it's right there. So click on the plus next to net capital losses of other years, and then simply input the loss that you have carried forward from a previous year, whichever year it came from. Plug it in, and then what UFile will do the moment it sees that amount there is that it'll claim the capital loss automatically for you. Okay, so the moment it sees the capital gain, it'll simply apply the capital loss for the previous years on that capital gain. You'll see it in your taxable income. So you won't see it directly on Schedule 3 or in your total income, but you'll see it applied in your taxable income. Okay, that's the way it'll be done. So I will stop sharing over here. Let's bring back Ida. And here we go, Ida. You're right back, and let's continue on.
Sorry, I missed a question from Kevin George.
Okay, perfect. Okay. Let's go ahead.
All right. He says, hello, I received EI benefits in 2020. How does that impact my taxes? I have not received any CERB benefits yet.
Okay. EI benefits are going to be taxed like any other income. Just like employment income, it's going to be the same concept. It simply is added to your income, and you will be charged income tax based on the tax bracket that you fall in federally and provincially. Okay. So that's essentially how that impacts its taxable income. Okay. Just like an employment income. Now, if your EI is related to the pandemic, meaning you received EI because you were laid off due to the pandemic, then if you have a balance owing at the end of the year, then you fall under the interest holiday, meaning you could wait until the 30th of April 2022 to pay your balance owing, and you wouldn't have any additional interest to pay on that balance owing. Okay, now CERB it's already done. Okay, so when you say I have not received any CERB benefits yet, you will not receive any CERB benefits anymore, because the CERB as a program has been sunsetted by the government. This was done, I believe it was late September of last year. Now the CERB has been replaced by the CRB, which is the Canada Recovery Benefit. Okay, so that's what it's been replaced by.
Okay, next question is from Mr. Islam.
Mm-hmm.
How to calculate in UFile how much donation to carry forward to next year?
There's nothing to calculate really. UFile will determine what you need as far as donations, and if you don't need all of your donations in the year, UFile will simply carry forward the amount automatically for you. Okay, so there's nothing for you to do. UFile through the MaxBack optimizer that we have. We have an optimization engine that does these optimizations automatically for you. UFile will simply determine this amount for you and carry forward the excess amount.
Okay, next question was, actually, it's not the complete question. Fatime, you said you did a return for a friend. Where should I put my name as a tax professional? Are you using UFile online or UFile for Windows? Very important to know.
Yeah.
Okay, next question, Stephanie.
All right.
What is everything I can claim working from home? I opened a daycare in my home in 2020.
Okay, so you're
Jerry.
Oh, okay. Oh God, yeah, that's not an easy question. First of all, Stephanie, congratulations on your new business. That's number one. Number two, remember the overarching rule when it comes to deductible expenses is: did you incur the expense to make income? Okay, that's what the government calls the general limitation on expenses. Okay, on business expenses. So when you start rounding up all the expenses that you incurred during the year, was that expense related to income producing? So in other words, making income for your business. Now, if we go specifically to daycare, so for example, any equipment that you bought for the daycare, any toys you bought for the daycare, these are all eligible as expenses. Okay. Now, some of them will be depreciable expense, meaning depreciable properties or capital assets. So then you claim what's called the capital cost allowance. So that's a CA. And others will be, let's say you bought, balloons or something, or you bought, pen and papers or crayons. These are supplies that you could deduct specifically as what we call a current expenditure. Okay. Now for your daycare, I'm assuming you've dedicated a portion of your home for the daycare. Okay. So then home office expenses would apply in that case. And you can basically deduct, pretty much as a business, you can deduct a lot more than an employee. Okay. So you can deduct, so basically what you're determining is take the portion of the home that is dedicated towards the daycare. Okay, take the square footage of that, divided by the total square footage of your home, and then whatever expenses relate to your home, okay, you have to prorate by that percentage. So meaning electricity, heat, mortgage interest, property taxes, insurance. What are some of the others that I'm trying to think of off the top of my head? Any maintenance, any repairs that you might have. So all those expenses you have to prorate based on the square footage of the home that is dedicated to your daycare versus the total square footage. So for example, if you used, let's take, I've got a 3-floor home. My basement is entirely dedicated to the daycare. That means I could deduct 1/3 of the expenses that I just mentioned. Okay, so again, as a business owner, a lot of expenses open up to you. Mortgage interest, property taxes, rent, if you don't own the home, home insurance, okay, electricity, heating, etc. These are the typical expenses that you could claim for the daycare.
Okay, next question again from Mr. Islam. He has two questions, but we'll do the first one. Two brothers buy first-time home jointly. However, they file taxes separately as they are over 18 years old. Who can claim the first-time home buyer's credit?
They both can claim, but they have to split the amount. Okay, so in other words, the amount itself of the credit is $5,000. Okay, so they can both claim, but they would have to split the $5,000. They can't combine. They can't go above $5,000 as a credit combined, meaning they can split it half and half, so 2.5 and 2.5, or one claims it entirely and the other one claims nothing, or they do like a 60-40 split, whatever they would like to do. The key is both are eligible, but they have to split the claim, and combined they can't go above $5,000 for the credit. That's essentially what they're allowed to do.
Okay, he had another, it's not quite a question. He said he accidentally filed a friend's tax return as a Saskatchewan resident, but however, he moved to Alberta last year. He has refiled, but there are no changes by the CRA. I'm not sure if there's a question there.
Okay, accidentally filed my friend's tax as Saskatchewan resident. However, he moved to Alberta last year. Now I refiled the tax. However, no changes made from the CRA. Yeah, if you refile the tax return, it takes a while. Okay, I'm telling you right now, any adjustment or refiling that happens with the CRA takes a while. You're gonna have to wait. Unfortunately, that's just the delays, the processing delays of the CRA right now. There's not much we could do there.
Okay, next question, Omar.
Okay, perfect.
The marginal tax rate could be different to the next year if the income is higher.
Yeah.
Can you explain, please, a little bit about the functionality of this rate?
Yes. Wow. A complex question. just like the last time, Ida. We've been.
You love these questions. Come on.
Yeah. Our crowd is really getting upscale now. So essentially, the concept of the marginal tax rate is, what would be my tax rate on the next additional dollar that I gain? Okay, that's essential. So if I make one more dollar compared to the taxable income that I declared right now, what would be the taxable rate on that additional dollar? So marginal tax rate is a little bit closer to the effective tax rate that you pay on your tax return, but not necessarily, because remember that the way the tax brackets work is that you get taxed at a different rate depending on the income level that you're at. So for example, if I made 60,000 last year, well, on my first 44,000, I'm paying 15%. And then on anything between and on my additional $15,000 or $16,000, I'm paying 20.5%. Okay, so then what would be my extra? What would my marginal tax rate be on that additional dollar? When that changes is when you jump from one tax bracket to the other. Okay, so let's take the example of 44 or 45,000. I think that's where the first tax bracket is. It should be around there. Let's make it an even number of 45. Okay, so on my first 45, I get charged 15% tax. Okay, now if I make 46,000, my marginal tax bracket is going to jump through the roof. Because again, what my marginal tax rate is determining is how much tax I'm going to pay on the additional dollar that I make. So because my additional dollar will be at 20.5% instead of 15%, well, now my marginal tax rate jumps. Okay, and that's when you start noticing differences. If you don't jump tax brackets, your marginal tax rate will stay the same, even if your income goes higher. Okay, but if because of that additional dollar, I jump to another bracket, now my marginal tax rate goes through the roof. So that's why it's not necessarily the most accurate gauge of what your tax rate is, but it's pretty close approximation.
All right. Now you're going to have another good question. From Rena. I bought a rental property in November and it was available for rent, but we didn't rent it until January 2021.
Yes.
Can I still claim expenses and rental losses in 2020? And also, are my closing legal expenses considered expense or capital?
Okay, so the answer is, it depends really. It's yes. I could say yes, but it depends what your intention was in 2020. So for example, If in November, when you bought the property, you were intending on renting it right away, but for whatever reason it didn't happen because you didn't find the right tenant, then yes, you can claim those expenses and then create yourself basically a rental loss. Okay, you can do that. But if you bought it but you did not intend to rent it till halfway till way into January of next year, then you can't. Then you're only declaring in January. But in theory, you can, as long as you can make the claim. If you get audited by the CRA, as long as you can make this, you can stake the claim. And look, I was advertising. I was going on Kijiji, advertising everything. I was going on Facebook, advertising for that I wanted to rent the place, but I simply did not find a renter until January. Then you are allowed, yes, because your intention was to your building was, in other words, for the government, your building was available for use. Okay, as of the time that you bought it. If it was not available for use as of November, but only in January, then you can't. Okay, you can't deduct those expenses right away. You can only start as of January.
Okay, thanks, Jerry, for that.
Mm-hmm.
Next one is Anna.
Perfect. Yes.
My employer issued a T2200S for
Okay.
salaried employee working from home due to COVID and a one-time reimbursement to cover expenses.
Okay.
I need to use all of the reimbursement for expenses, or I have to add it to my income. I have entered all amounts in UFile. Which line in the tax return would tell me my total expenses claim? Line 5 or line 12?
Okay. So I'm assuming when you say line 5 and line 12, we're talking about the T777S in this case. Yeah, your total expenses calculation. Yes. So I'm just looking at the form right now. So, okay, first things first. What do you do with the reimbursement? Okay, it depends. You would include it. Normally, your employer should have already included it on your T4, okay, as employment income. You're going to notice it in your box 40, okay, of the T4. All right, that's the place where you would notice whether it's been added to your income or not. Now, if your employer has added it to your employment income, then you deduct your full expenses, okay, because you're being taxed on the reimbursement as employment income, okay? So you don't have to worry about any of that. All right. Now, if your employer has not included it in your employment income, then what you have to do is reduce your eligible expenses by the amount of the reimbursement. Okay, so you deduct them straight off and you only input the net amount in UFile, whatever's left over. Okay, so that's essentially that's how you would handle it. Again, that's only if your employer has not added it to your employment income. Okay, that you would do that. So you yourself, you're not going to add it into your employment income as taxable income if your employer hasn't done it. What you do is that you reduce your eligible expenses by that amount. Now, which line in the tax return would let my total expenses be claimed? So I'm just going to look at the form now. I'm looking at it right now. And it would be line 5, basically. The line 5 is your total expenses, the amount that you're claiming. Okay. 12 are your
Um, hmm. Oh, did we lose Jerry? Let me see if I can reach out to Jerry. I guess we just lost Jerry. We'll take a few moments if he can log back in. Okay, don't worry, we will continue as soon as Jerry comes back. Okay, let's see if we can get Jerry back. Sorry, we just have a bit of technical problems here. Okay.
I'm back. Okay.
Okay, what happened there? I was trying to get hold of you.
My computer completely froze. I'm sorry. This just to show you guys that we're live. All right, so we're not making that up. We're live.
I was trying to get hold of you anyways.
Yeah, so I apologize for this. No, my computer completely froze. I had to reboot. So I apologize, everybody. All right. So I think we're still live on Facebook.
Yes,
I think we're
we
still
are.
good. Okay, perfect. All right. So basically, yeah. So I was going back to that line. Line 5 is your total claim. Okay. Line 12 is the breakdown of all the expenses before the proration. Okay. And before other types of expenses that you're allowed to claim. Okay. So that's essentially the answer to that one. All right. So where was I?
Next question is Marcella.
Okay. Just give me a second. Let me find.
I'll read the question to start off. I arrived in Canada in 2019, but I did not file my tax return. I am an international student. I am filing 2020, but UFile does not accept this date entry in the section immigrant. Should I consider January 2020?
Okay, can you repeat that again? I'm sorry.
Okay.
She's an immigrant in this case.
She arrived in Canada in 2019 as an international student. Okay, and she did not file a 2019 tax return. So she's trying to file a 2020.
Okay.
And UFile does not accept the date of entry in the section immigrant.
Oh, a 2019 date as so she's trying to enter a 2019 date. No, of course not. Of course it would not. No, it won't work. No. In this case, you should, if you were an immigrant in 2019, that means you should have produced a return in 2019. That's what it means. If you establish residential ties in 2019, then your immigration date is 2019 and you have to produce a tax return. In 2020, you are resident for the full year. So that's why the program is not going to accept it, because you can't have an immigration date that's in the prior year. It just doesn't work. You should have produced the return in the prior year. That's how that would work. Okay.
Okay, next question by Lino. Foreign income rental on T1135 needs to be filed, also on a T776, but the address cannot be entered on the T776 without falsifying the province and postal code.
Yeah.
Is there a better way, or is the T776 really needed?
You need the T776. Unfortunately, okay, I think I found the actual question here. Here we go. Unfortunately, yeah, this is just the limitation of the CRA. There's nothing we can do there. The government simply, I think it's kind of like a fail-safe to basically force you to produce a paper return in that case. Listen, if you don't want to falsify the postal code, you have to paper file the return. It's not our doing, it's the CRA's doing. It's simply a restriction that they have. There's nothing we could do on our end. So unless if you want to stop falsifying, then you have to mail in the return. There's nothing we could do.
Okay, next question from Sin. Hi, how do I file for selling a rental property and capital gains on it?
Okay, so you sold the rental property is what I'm assuming here. Okay, so in this case, what you would do is you still produce a T776 like you ordinarily would. Okay, and then you dispose of the property in the capital cost allowance section. So you would have to do a disposition from there. Usually by entering all the relevant information in the disposition of the CCA class, UFile will produce the Schedule 3 with the capital gain for you. Okay, so it'll simply do it automatically in that case. It even, I think, asks you the question whether you want to produce it or not. Okay, whether you want to produce the capital gain or not in there. So it simply does it offhand.
Okay, Lino comes back to his question. When I declare foreign rent with the T776, I paid tax twice to the foreign country and to Canada. Is this correct?
Yes, but you can claim the foreign tax credit though on the tax that you paid in the foreign country. So you're not going to be double taxed. Okay, so there's no. And you're absolutely right to ask that question. You have the right instinct, Lino. It's like, well, why am I paying tax twice on this income? I've already paid it in the foreign country. You're absolutely right. This is where the foreign tax credit comes in. So what you have to do is you have to add the section for the for foreign income. You have to add it to UFile, and then once you're there, you simply enter the net income that you've already produced on the T776, and then you declare the foreign tax that you've already paid to the foreign country. And then what's going to happen on your Canadian tax return is that the federal government is going to give you, and possibly the provincial government as well, depending on the calculation, the federal government is going to give you a credit for the tax that you paid in the foreign country, which is called the foreign tax credit. So make sure in UFile that you add the section for foreign income. Okay, go to the interview setup section, and then tick the box for foreign income, and then you simply re-enter the net income just for the purposes of the foreign tax credit. You're not redoing it again, and then you enter the foreign taxes.
Okay, Marcella has another question. Actually, this is a good one. I'm sure other people have the same thought. Okay, Marcella says she worked from home due to COVID. If I don't have anything to pay in my tax return, is it possible to receive the $400 as a refund? That's for the working from home expenses.
Working from home expenses. Working from home, it's not a refund. It's a deduction off your net income. Okay, so the government is not actually reimbursing you in cash. Okay, it doesn't work that way. What you're doing is that you're lowering your taxable income by $400. That's what the home office expense deduction is. So essentially what it's going to be is take the tax bracket that you're in. Take your taxable. So basically, to figure out what you're getting back from the home office expenses, go to your tax bracket and multiply that, and multiply the tax payable on your tax bracket by the $400 that you're getting as a deduction, and that's essentially your tax reduction, both federally and provincially. That's essentially what it is.
Okay. Next question is Fatime. He did reply to the question before where he puts that he's a tax preparer. He is using UFile for Windows.
Okay, and what was the question again? I'm sorry.
He did a tax return for a friend. Where would he indicate in UFile that he's a tax preparer?
Okay, you would basically go into the setup. So let me just do that. I've got Pro with me right now. So first of all, you got to buy UFile Pro. Okay, that's number one. And second of all, you have to become now an eFile agent with a CRA. So you have to register with the CRA as a tax preparer to be able to transmit the returns electronically on behalf of your customer. Okay, that's essentially what that is. Okay, now once you've done that, I'm just going to hide you for 2 seconds again.
Go ahead
and show it. So let me go ahead and share my screen again. All right, and I'm just going to share. All right, let's go back. Show it in the stream, and now go here. So once you're there, you go into the settings menu. Okay, and then from there, you go to the menu called eFile NetFile Setup. Okay, so settings, eFile NetFile Setup, which is where I'm at right now. You click over here, and then you say that you are a professional tax preparer, and you start entering now all your information. So again, you have to register with the CRA, like I mentioned before. Okay, you can have the CRA will give you an agent number and a password. You enter all of your tax information there, and then you'll get, and then you'll be able to produce the eFile authorization form using UFile Pro, and then your customer has to sign that authorization form before you're able to transmit the return on their behalf. Okay, so that's essentially what that is. Okay, and then you have over here federal authorizing or canceling a representative. So you see here, you enter all your information, and the program will also produce the authorization form for a general authorization of your customer's file. Okay, that's how that works. Okay, so again, you go to the settings menu and you go to eFile NetFile Setup. That's where you go. So I'm going to stop sharing. I'm going to bring back Ida. Here we go. 3, 2, 1. Ida's back. All right.
Great.
All
Okay,
right.
our next question is from Kathy.
From Kathy. All right, let me find Kathy's
Kathy Roberts.
question. Okay, just give me. Okay, go ahead and I'll.
Okay, is
I'll
travel medical insurance deductible as a medical expense?
Yes. The short answer is yes. So the fee that you pay for the insurance is deductible, or you could claim it as an expense for medical expenses. You could do that. Absolutely.
Okay, next question.
Oh, there it was.
Maria
Mhm.
Maria Joe, I have an online store through several websites, but I have to have an office for the computer, the media and storage room for the product, and a room for creating the product from purchases of material to make the product. Plus, I have to drive to get to the products. What expenses can I claim?
Okay, so I mean, if your office is purely used for the business, which it looks like it is, you're using it for computer media as a storage room for the product, then whatever rent you're paying for the office becomes a deductible expense off your business income. Okay, so that's the long story short of that. Okay, so you can claim those. Now, driving from your home to the office is not necessarily eligible. Now, if you're using your vehicle for other things, okay, so driving around to customers, for example, or for doing deliveries of your product, then the mileage becomes deductible. So then, in other words, you could claim your vehicle. If you own the vehicle, you can claim capital cost allowance, and then you can claim your fuel expenses, your maintenance expenses, license and registration, et cetera, et cetera. But the drive from your home to your office is not eligible. Okay, that would not be an eligible expense. But anything else you use your car for your business does become eligible. And of course, you have to start logging your mileage. So you can't claim the full expenses of what I just mentioned right now. You have to claim them on a prorated basis based on your business usage of your vehicle. Okay, that's what you're eligible to claim. For any expense related to the vehicle.
Okay, next question is from Corey.
Mm-hmm.
Are CERB benefits to be repaid, or is it just a taxable income?
It's taxable income. So you're going to pay income tax. So you don't repay it unless you were overpaid. Okay. So in other words, you were not entitled to get the CERB and you still got it anyways. And then for the weeks that you were not entitled, you would have to make provisions with Service Canada to repay the federal government on those benefits. But if you were entitled to get the CERB, okay, and you were not overpaid, then it's simply taxable income on your return, just like any other income, for example, employment income. It works basically the same way.
Okay, Mr. Islam has another question. How to declare the TFSA over contributions?
Well, that will be a special tax. Normally, your financial institution will emit a T4A slip, okay, to indicate a penalty that you pay on the overpayment. So essentially, you will pay. I think it's similar to the RSP overpayment penalty. It's like 1% per month that you overpaid on the value of the amount that you overpaid. So that your financial institution is going to determine that. They're going to emit, like I said, a T4A slip with the penalty amount.
Okay, next question from Pat.
Mm-hmm.
Can I use a consult fee at a doctor's office as a medical expense?
Yes, absolutely. That is under a medical practitioner. Okay, that's a medical practitioner fee, and you're absolutely entitled to claim it if you were required to pay, and your provincial insurance, for example, did not pay for that consulting fee. Absolutely, it's a medical expense.
Okay, next question from Johnny. On a T1, where do we add the forgivable portion of the CBA?
That's a good question. So that's, for those who don't know, that's the Canada Emergency Business Account. So that's essentially where you borrowed money from the federal government under the CBA program. And there's a portion of that loan, if you're a business owner, and there's a portion of that loan that is forgivable. Okay. So normally a forgiven debt, you have to go through a whole slew of tests. Essentially, you have to take away the amount directly from other other tax benefits that you might have gotten, for example, capital losses or non-capital losses, etc. The quickest thing to do is to include it in your business income. That's basically the quickest way. You simply plug that in as an additional amount that you got on your business income. Okay, that's usually what the CRA would be expecting. But if we go into the technical definition of a forgiven debt, you have to first take it away from tax benefits that you get. So, for example, non-capital loss balances or capital losses balances. If there's anything left over, you add it as your business income. But again, the quick way to cheat that is to simply throw it into your business income.
Okay, next question is from Ray. School didn't send me a T2202, the tuition fees. Can I use the tuition fee receipt for the tax claim?
Yes, I mean, you are entitled, but you have to make sure that your school is recognized as a post-secondary educational institution. Okay, that might be the reason why they haven't given you a T2202. Okay, because if they're not considered a post-secondary educational institution, then you won't get it, and your fees are not eligible. So make sure that educational institution that where you went to school is considered a post-secondary educational institution. And if it is, then yes, take whatever tuition fee you paid, if you have the receipt, and claim that as a tuition expense.
Okay, Rena, again, I think we forgot to answer her second part of the question. That was the rental property purchased in 2020 and only start renting in 2021. She's wondering if the legal expense to close the sale, the purchase is considered an expense or capital.
Yeah.
And what about the land transfer tax?
So those are usually capital. Those you would add it to the cost of the building. Okay, meaning that when you declare the addition of the building to the T776, these type of expenses the government usually considers as capital. So you can depreciate those expenses, but you can't deduct them straight as a current expenditure. You can't do that usually.
Okay, Marcella didn't understand exactly the proration calculation for the kilometers used for self-employment. She was self-employed Uber driver, as a matter of fact. So can you just maybe go a little bit into it? How to prorate it? And at the same time, I'm sure you're going to answer several people's questions.
The proration is automatic, but you have to indicate to UFile your business mileage and your total mileage. Okay, so those are two entries that UFile is going to ask you to put in. So let's take a really simple example. I did 30,000 kilometers last year. 10,000 of them were used for my business for Uber. Okay, so in UFile you input the 10,000 business mileage. You put in the 30,000 total mileage. You enter your expenses, your total expenses for the year. Okay, so you don't do the proration yourself. You let the software do it for you. Okay, so you enter all your total expenditures, meaning the total value of your vehicle. Okay, and the total value of your fuel expenses, license and registration, maintenance costs, etc. You enter the total amounts, and then because you inputted the mileage into UFile, UFile will do the proration for you. That's how it works.
And what about can they apply for CCA?
Well, that's what they get. CCA is part of it. Yeah, so that's what I was saying. When you put in the addition of the vehicle, so let's say it's a $20,000 vehicle, then what you're claiming, you put in the $20,000 total cost. The UFile will claim the maximum amount of CCA that you're allowed, and then UFile will prorate it based on your business mileage. Okay, but the key, of course, is that you have to input those two numbers, those 2 kilometer numbers, meaning your business kilometers and your total kilometers. And then from there, UFile will calculate automatically, and it will calculate the CCA automatically for you. You just input the value of the vehicle when you purchased it. That's all you need to do. And UFile takes care of the rest.
Okay, perfect. Next question is from Yudi. How can I claim the daycare expenses to the low-income person of the household?
That's automatic. Daycare, childcare expenses are always given to the lower income spouse. Okay, so that's automatic. So what you do is in UFile, you're going to add your child as a dependent. So you have to add your child as a dependent in the file. You input the daycare expenses in your child's file, and then UFile will automatically assign them to the lower income spouse because that's the law. Okay, the Income Tax Act clearly specifies that's the lower income spouse that can deduct the childcare expenses. There are some exclusions to that rule. For example, the lower income spouse was going to post-secondary educational institution, in other words, a university, full-time or part-time for certain weeks of the year. And for example, one spouse was hospitalized. That's another example of that rule.
Okay. Next question, Fatme. I guess you're going to probably reiterate, and he's asking, I have a client whose business is a hair salon. Can we report her car expenses from home to her work and from work to home? This is for all businesses, as a matter of fact. Answer the question.
The answer is no, because if that's your normal place of business, it doesn't work. You understand? Now, if they were doing hairdressing mobile, like in other words, they were going to the customer's home to cut the hair and make money, then yes, those kilometers are deductible. But the kilometers from the person's home to the salon or to the salon itself, these are not eligible. Okay, for the government, because you're doing this anyways, right? You're driving to that place anyways. But if
that's for any business,
that's for any business, and that includes employment expenses too. Okay, that includes employment expenses as well for a salaried employee. But if you are cutting your customer's hair in their home, then the mileage from the salon to the customer's home and back is eligible. That is eligible.
Okay, the next question is from Tony.
Okay.
I filed our joint 2020 taxes with my spouse, receiving a nice refund, which has been deposited, and I owe a chunk which I was going to pay on April 30th. Looking at our my CRA assessments, we noticed that there were 6 tax slips that the CRA has on file that I do not have.
Yes.
Can I just go in my tax return and include and resubmit? Should I continue to pay the amount from the original tax submission? And he promises next year he'll wait to get all the documentation.
Well, first of all, Tony, it's not your fault. It's not your fault. I mean, whoever was the emitter of these slips simply did not mail them to you. That's essential, or send them to you, or give you access to them through an online portal. I don't know what the slips were. I don't know which slips you were missing, but it's not your fault. Okay, that's number one. Now, normally the CRA should have reassessed you with those amounts already there, because if they have them in my account, that if they're showing them to you, my account, that means they have them. And normally when they assess your return, they should have assessed them with those slips already accounted for. And now you have to double check that to see, okay? Check your notice of assessment with what you declared in UFile. If the amounts are the same, then yes, you have to resubmit. Okay, you have to do what's called an adjustment. You can't just resubmit a return through NetFile. You have to do an adjustment, and that you could do directly into the My Account CRA site. You could do it directly there, okay, if you want to. Now, if you notice there's a clear difference between your notice of assessment and what you filed with UFile, then that means the CRA has already accounted for it, okay? And at that point, there's nothing for you to do. Just keep paying whatever it is that you owe to the CRA. So you have to make that comparison. You have to double check.
Actually, you made such a very good point, Jerry. So therefore, if you submit your tax return and when you get your assessment, there is a change on it, we don't need to submit a correction to the tax return.
No, because they have it. Remember, you noticed, Tony had noticed it when he went to My Account, right? He noticed it directly in his account, which means it's the CRA that's showing you that they know these slips. So I would be very surprised that the CRA has not reassessed you already accounting for those amounts. I'd be very surprised if they haven't done that already. So double check first. Look at what UFile gave you as a result and what the CRA gave you in the notice of assessment. Compare the two. If you see differences, you're good. If you don't see any differences, then yes, you have to do an adjustment, what's called an adjustment, and you can do it directly into the My Account portal since you already have an account with them. So go ahead and do it directly there. It's much faster. Okay,
next question is from John. I received an additional T3 after my return was filed and assessed. To complicate matters, the T3 included a capital gain amount, and I had claimed a net capital loss carried back to 2019. Should I bother to refile or just let the CRA pick it up and when the financial institution files the T3?
It's up to you. I would not wait because God knows when the CRA is going to make that adjustment, and they might charge you interest in the meantime. So if you've already got the assessment and you said that you were assessed, I would make the adjustment directly into my account portal of the CRA. Like I said, sign up. It's easy as pie to do. I can't recommend it enough. And for those of you who've already been watching us regularly on these Facebook Lives, I keep recommending it. Sign up to my account. It's everything is there. Everything that pertains to your tax return and your tax situation with the CRA, it's all there. And to boot, you can do adjustments, directly there. You can do them online, and they process them much, much faster. So I would recommend that you make the adjustment right away, because first of all, you don't even know when the financial institution is actually going to submit that form. To be honest with you, they should have done it already. Okay, so March 31st is their deadline usually for a T3 slip. Okay, that's the deadline, but you don't know. You don't know if they're going to do it. So I would suggest, and then in the meantime, interest accrues. Okay, so so that's why my recommendation is adjust it, file the adjustment right away, and then that way you won't get accrued interest on your on your new assessment.
Okay, Mariah has a question. Or Maria, sorry.
Yeah.
I have not registered my online store with the government or city where I live, as it is more of an expense right now as it is in the beginning stages. How do I claim the store? Under my name or under the name of the store? I use Etsy, Redbubble, Facebook, Google, Craigslist, Kijiji, and a couple of more sites to try and sell my product.
Okay, let me see. How do I claim the store? Well, it's a business. I mean, it doesn't matter if you're
self-employed. I think she's self-employed.
You're self-employed. Mary Jo, it doesn't matter whether you've done the requisite registrations. The moment you start making income, the moment you essentially started your business, at that point you're self-employed. So you have to produce a T2125 on your tax return. Now, I don't know if you're in Quebec or not, but in Quebec there's an equivalent form, which is a TP80. Okay, but you are self-employed, so you declare everything as self-employed income. That's what you do. Doesn't matter when you registered. The moment you made $1 off that business, it is taxable right away in the year that you made that $1.
Okay, next question is from Dina.
Perfect.
If there are two buildings purchased in the same year, under CCA 4%, it asks me to put all information for each, which created a separate line for the same rate. Is that okay?
No, if these are rentals, Dina, you have to produce two distinct forms. Okay, so if these two buildings that you bought are rentals, you have to have two T776s in your return, one for each building. So you can't have two lines of class one. It doesn't work. Class one for the CCA is one of the exclusion classes when it comes to distinct properties, meaning that almost all CCA classes have to be lumped into one class, with the exception of a few, one of them being a building, a class one building, which is what you have. So in your case, it's two distinct T776s, and with each building on it, with their income and expenses on each individual T776s.
And she's saying she's using the T2125. Is it a T2125 versus a T2125P? So
if it's okay, so hold on. The building, then it's a business. In that case, it is two distinct class ones that you have to put in the same T2125. Okay, in that case, okay. But if it's a rental, it's two separate forms that you have to do. But if it's a business, you're absolutely right. It's two separate lines, because class one is one of these exception classes, like a vehicle that's worth $30,000 and more, where you have to have two distinct classes, okay, for those buildings. So that's what it is.
John has a question. I'm not sure it really pertains directly to the software itself. Autofill hasn't downloaded all my T5s and T3s as it did last year. Will this correct itself at a later date?
Listen, what the software downloads, what the CRA has. So normally whatever's in your My Account is what the software is going to download. We don't control the data that gets downloaded. So double check with My Account with the CRA to see, okay, whether those slips are there. If they're there and the program has not downloaded them, then contact our support staff, because that means there's a glitch in the software somewhere.
Or the check mark came off.
Yeah.
You know?
Yeah.
So, Lisa. If claims separated from 2019 from a common law relationship on last year's taxes, can I now claim single, or will I forever be separated?
You will be branded separated, Lisa. Unfortunately, that's how it works. You cannot become, now again, I say this in, with humor here, but when it comes to income tax law, you stay separated until you get another spouse. Okay, that's essentially how that works. Okay, so you remain separated in this case. There's no, you can't come back to, I think it was single, right? I think on the return it says single actually. Because
Yes.
now, in actuality, you're single. Let's not kid ourselves. In the everyday world, you are single, but in the make believe income tax world, okay, and believe me, guys, there's a lot of legalese in there, and there's a lot of things that are very different compared to what the way the real world works. You are separated. So unfortunately, that's what it is. You stay separated.
Okay, next question from Marie. Mary, sorry. My client married a US citizen. She immigrated to Canada in August 2020, and she does not have a SIN number. Will he be able to file his return with her as a dependent? She has no income from the US or Canada for the time she lived in Canada in 2020.
The answer is yes. But I would say, Mary, is tell your client to call Service Canada to get a SIN number. It's child's play to do that. You call up and they give you the SIN number pretty much on the phone. So there's really no reason not to have a SIN number. But the answer is yes, because again, she is a resident of Canada because she has a significant residential tie to the country, which is her spouse. Okay, so she's automatically in Canada. So that means that she is considered an immigrant as of August. Okay, and then yes, your customer can claim this individual as a dependent for the spousal amount. Okay, starting based on the income that your customer gained as of August 2020. So that's the only income you determine. And in UFile, it's going to ask you what was the income of this individual while they were in Canada, meaning as of August. Okay, so the answer is yes. But in order to file the return, again, get your friend to call Service Canada. It's really quick. She can get a number. He or she can get a number right away. She can get a number right away.
Next question, John. I've withdrawn TFSA 1 year and want to apply it the next year. Will it be the full amount that is the increased value that accrued, or just the initial amount of the deposit?
It's the increased amount. It's the increased value. So for example, I put in 5,000 1 year. Okay. A year from now, it's worth 6,000. Okay. I pull it out in that year, 6,000. The following year, my new room is 6,000, not 5. It's not my original contribution. It's the actual amount that I withdrew, that I gained back. So in other words, the accrued amount is what I gain back. Now, remember that the reverse is also applicable. Meaning if I put in 5,000 1 year, next year it's down to 4. I pull it out, then the only amount that I'm allowed to put back is 4,000, not 5. So it works both ways. Okay, that's how the TFSA room works when you make withdrawals.
Okay, and next question. Sorry, let me look for it right now. Maria, I had a business that went bankrupt because of the COVID and had to change my business. But some of the office printers and computers and appliances are now being used in the new business. How do I show that it is no longer in the old business and now part of the new business?
So what you do is what we call a deemed disposition. Okay, so in other words, you dispose of this equipment in the CCA classes for the old business, and usually you'll dispose them. You dispose them at whatever fair market value it is. And don't worry, there's not going to be any tax consequence because that equipment is going to be worth less now than what it was when you originally bought it. Okay, so you dispose them there, and then you purchase them in the new business at the fair market value of that equipment today. Okay, or when you started the new business. Okay, that's essentially what you need to do. So although there is no bona fide transaction, you haven't actually sold them to a third party, you pretend that you did. Okay, and you sell them at the fair market value, and then you purchase them again in the old business, and you purchase them again at the fair market value in the new business.
Okay, Guinar, Which line is the best to report foreign income for an annuity abroad?
So for annuity abroad, that is a good question. Because that's normally investment income, that would normally be considered an investment income. That one, I'm be honest, I'm not sure offhand. I would say, so what is the best line to for foreign income from an annuity? It depends the components of that annuity, right? What's in that annuity that you made. So it could be interest, it could be dividends, it could be a capital gain. So it all depends on the components of that annuity. So double check to see what type of income represents that annuity, and you go from there. Essentially, you choose either interest, dividends, or capital gain. It would be one of those.
She's also asking how to disassociate a family member from the UFile account in order to file independently.
Well, listen, if it's whether it's Windows or whether it's the online product, you just delete the file. That's what you would have to do. You would delete the dependent, and then you would create a brand new file. Unfortunately, you can't port over that dependent or that spouse into the new file. So you'd have to make sure that you print off all the required documents and you have all the carry forwards that you need, delete the file, and then create a new file and manually input the carry forwards into the new file.
Okay, it's now.
Well, let's go a little bit over because of the glitch that I had.
We will go over. We're not going to take any more new questions, so we'll try to filter through the ones we have right now. Sorry. Okay, and if I skip some of you because you've asked several questions, I'm just trying to pass over some other people also. Okay. Dijalia, in the self-employment, if the web page that generate business income changed the name in the previous year, how do I make this change in UFile?
I just change the name in the entries. There's really nothing else to do. I mean, it's not majorly important to the CRA whether you change the name of the website or not. The key is it the same business? Is that same business using now this new website? You could just simply change it there. That's all. There's really not much to do there.
Kelly wants to know how to claim medical expenses.
Okay, so that's the question is right there. Okay, so Callie, it's very, very simple. I'm just going to go ahead and share my screen. Just 2 seconds, Ida. I'm going to hide you.
Go ahead.
All right, so I'm just going to go ahead now and share the application again. All right, let's go back and show it in the stream. Here we go. Okay, so now I'm in UFile. So when you're in the interview, for pretty much every single file that you create in UFile, you're going to notice a medical, disability, and caregiver section. Okay, this is going to be automatic. Okay, you don't even need to go to the interview setup. The program produces it for pretty much every single file. You can make sure that it's there, but again, you don't have to. You could go to the interview setup over here on the left and tick the box next to medical expenses. You could do that. But again, by default, UFile will have it already there. So you go to medical, disability, and caregiver. There's your section. You've got now the section on the right called medical expenses. Click on the plus sign and simply input your medical expenses one by one. Okay, so let's go ahead now and stop sharing. Let's bring back Ida. And here we go. Okay. All right, Ida, you're back.
All right. So Farhan is asking if a child is 20 years old and he's unmarried. Is it better for the person to file a return as parents dependent or file separately?
It depends. Are you claiming amounts on behalf of that child? So, for example, at 20 years old, it's likely there's a very good chance that the child is doing post-secondary education, whether it's a technical school or whether it's a university or a college. Okay, so in that case, if you want to claim those amounts on behalf of the child, then you add that child as a dependent. If the child is literally completely independent, doesn't have these types of amounts that you can claim on their behalf, then you can then you go ahead and create an account, a separate account for them. So it depends. It essentially depends what you can claim for that child.
Okay, next question. The Facebook name is Slaughterhouse.
Okay.
With UFile, when inputting the digital currency capital gain form, do you have to fill out a separate capital gains form for each individual digital coin that was sold or traded?
Yeah, it's each transaction. Okay, that's what you're putting in. Okay, so now if you have like a bunch of them, you could sum them up, because when you transmit the return to the CRA doesn't see every detailed transaction. They just see the sum of all the amounts. So my recommendation is, if you don't have a lot of transactions, you put it in per transaction. That's essentially what the CRA is expecting. If you have 30, 40, 50 transactions, create yourself an Excel sheet, do the total, and just plug in the total and transmit the return.
Okay, next question is from Doug's son. So he is specifically asking, he forgot to file, he filled his tuition fees, a tax return, submitted and got his refund, but he forgot some tuition fees. So what does he have to do right now? And this goes for anybody else who forgot something.
Adjustment.
Go ahead.
Just like we spoke before.
Just file an adjustment.
It's you just file an adjustment, just like we spoke about before with the other cases. So what you're going to do is, again, my recommendation is go through the My CRA account portal. It's the quickest way of filing these adjustments. You could do it with UFile as well. We produce the required form, which is called the T180J, but you have to mail it in. Okay, you have to produce it in UFile and then mail it in, and it takes a long time when you mail it in for the CRA to process your adjustment. So my recommendation to all of you is create a My Account portal.
We just lost Jerry again. Okay, go ahead.
I'm there. Okay, so my sorry about that. So my recommendation to all of you is go through the My Account CRA portal. That's the best way of doing it. And file it there. I mean, honestly, CRA should pay me commissions for this, for how much I'm advertising my CRA, my account for the CRA. But it's true. It's a great tool, everybody. I can't recommend it enough. Create the account, do the adjustment there.
Also on the My Account, you also find your RSP deduction limit, your TFSA limit.
TFSA is the big one. TFSA is the big one because it's the only place you can see it. There's nowhere else. The government does not tell you your TFSA limit in your notice of assessment. The only place they tell you is in the My Account portal. So that's a big one right there.
It's accurate what they have.
Absolutely.
Okay. So very important to know. Yep. Okay, Dina, is RSP room for this year will be affected by the employer matching the RPP? For example, if someone's RSP 2021 room is 2,500, but he expected that the contribution through his employer and the employer match will be more than the room.
Yeah, the answer is yes, and that's what's called the technical term for that is called the pension adjustment. Okay, and you see that in the notice of assessment. There's a calculation there, and you'll get it. It's usually box 52 of your T4 slip. Okay, and basically what a pension adjustment is your contribution plus your employer's contribution to the employer pension plan reduces your RSP limit. Now, the good news here is that you're not necessarily in an over-contribution automatically, okay? The reason being that the contribution room is based on the calendar year and not the contribution year, okay? Meaning that you're already gaining employment income during 2021. So it's very likely that you're not going to be in an overpayment area. Likely, okay? But you still have to check to see. But yes, it will affect it. Absolutely. It's not just your employer's contribution, it's also your contributions in that employer pension. It's the two combined that come in to reduce your RSP room, which, like I said, is called the pension adjustment.
And Dina has also a second question. If someone is a Canadian citizen and left Canada in 2019, and he doesn't know if he will be back, he didn't have any income in Canada except for a bank account of $500. Should he file a return? And is he considered deemed resident?
Well, the question is, what did he file as in 2019? Did he declare to the government that he left the country? Because there is what's called an emigrant return, right? Where you were on the first page of the tax return, you declare that you've departed from Canada and that you've cut all your residential ties with the country. If you have not declared this in 2019, the CRA is expecting a tax return in 2020. Okay, so that, again, it depends. Did you declare this individual, did this person declare themselves as an immigrant in 2019? If the answer is no, then they're expecting a tax return in 2020. In that case, if you want to do this accurately, you have to adjust 2019, declare the immigration date, and then in that case, there's no tax return required in 2020. But as of right now, as of this moment, the CRA is expecting a 2020 return.
Okay. Philip wants to know, where do I claim health insurance premiums?
I'm sorry, who asked that?
Philip.
Oh, here we go. Where should I claim health insurance premiums? Medical expense. Very simple. It's in there. Whatever you pay in order to be insured health-wise is an eligible medical expense. You claim it in medical expenses.
Okay, I'm just going to go back to Ginar's question because she answered it is pension income, not interest, dividend, and capital gains. I'm just trying to find her.
So you have your answer. So you have your answer right there. That's why, remember, I was saying that you have to determine what the components are. So if it's considered pension income, then it's foreign income pension. That's where you're going to plug it in. So the answer is right there.
And Mariah had several questions. People who are self-employed, tax deadline is
June 15th. Is June 15th. If you don't, but remember, your balance owing still has to be paid by April 30th. Okay, if you don't want to accrue interest on your balance owing, you don't pay any penalties if you file by June 15th. But if you have a balance owing on your return and you did not receive any of the COVID-related benefits that I mentioned before, then interest will start getting charged as of April 30th. Okay, so my recommendation is file April 30th. I mean, it's really a trap when you think about it. It's like, okay, well, I don't pay any penalties June 15th, but I'm paying interest if I owe money as of April 30th. So just file by April 30th. That's always your best bet.
And she also wants to know how to show that she sold the equipment from one business to the other.
Oh, it's in your CCA class. So you should have that equipment. A printer would probably be a class 55. I don't know what else you had there, but in the class 55, you indicated disposition. So you essentially sell it. Okay. But remember, you're selling it at a depreciated value because for sure that printer is not worth what you paid for it 2-3 years ago. Okay. For sure. So just take a guesstimate of what the value is, plug it in, and there's no consequence. If anything, you're probably going to have a terminal loss in that case. And then you buy it, your second business buys it at the value that you indicated that it was sold in the other business. So, and you add that in the CCA class and it would be class 55. I believe computer equipment, don't quote me on it, I might be wrong, but if memory serves me, computer equipment is class 55.
She's also saying that she has a mile app on her, I guess on her cell that calculates her travel kilometers for work and for personal use.
Perfect.
Can she use that?
Yeah. That's her log. That's her logbook right there. That app becomes your logbook. If the CRA checks you afterwards in an audit, you show them that becomes your logbook because the government does require that you keep a logbook for at least 1 quarter of the year. Okay, so you have to do this for 1 quarter of the year. So if you have that, that's and I think we mentioned this, Ida, in other in our podcasts and in other Facebook lives that guys use technology. Technology is your friend. Okay, so use these apps that track these things for you. You don't have to sit there and use pen and paper and shoeboxes anymore. That's gone.
And one last one was a question on the student credit, that training credit. Hold on, let me find it.
The Canada training credit? Who's the name?
Mr. Islam. It was a little bit further up in the questions.
Okay, I'm just trying to find it 1 second. Okay, can you read out the question in the meantime?
He wanted to know how to calculate it and where.
The Canada training credit we're talking about?
Yeah, I'm just trying to see if it was the Canada training credit or the other credit for the students. I'm trying to find the distinction between the two.
Okay, I found his previous question for the two brothers. Is it after that?
No, after that.
After that, okay. Let me see if I can find them again. So
I think he's still watching, so he can.
Yeah, I'm trying to find.
Oh, okay.
Here we go. How to claim the training? Yeah, I just got it. Yeah, I just posted it now. How to claim the training credit? Okay. It's very simple. Okay. So the training credit is very simple. The moment you enter tuition fees, within the regular section of tuition fees, the program will claim it automatically. Okay, the Canada training credit, as long as you meet as long as there's the limit that's there. Remember that in 2019, your client has to meet the criteria. Okay, which is that they're between 25 and 65. They have working at least $10,000 of working income. They're resident throughout the year, and they didn't make a lot of income, meaning they didn't make more than $150,000 in a year. As long as they met that criteria, they were entitled to $250 limit. So then once you enter the tuition fees, your training credit is the lesser of half of your tuition fees, or the limit that you accumulated up until that point, which of course would have been 250 because it was the first year. So it's automatic. Now, if you don't have the limit in the software, you go into the tuition section, and there's going to be an option there to indicate the limit that was accumulated up until that point. You can enter it manually directly there.
Okay, and I think this concludes the Facebook session. So tax deadline, April 30th?
Yep. So April 30th, just remember as well, everybody can go to our website. We have a lot of research in our Facebook page as well. We post a lot of articles in our blog that pertain to tax changes, that pertain to other interesting topics. Like we just came up with one on the five misknown or unknown medical expenses that you can claim. Okay, so they're always, all these articles are always posted on our Facebook page, and they're on our UFile page. So go to ufile.ca. Okay, and once you are on our page, you go to tips and tools, I believe is the tab, and then go to the UFile blog. Within the tips and tools tab, we also have a tax and you section, which answers some frequently asked tax questions, and also resides our podcast. So we record an audio podcast, and we also have a video podcast every 2 weeks or so on our YouTube page. So look up UFile on our YouTube page, on YouTube, and we produce, again, podcasts on various tax topics. Do not hesitate to go there and check out check out all these interesting topics that we talk about. Okay,
just one quick question that came in.
Yep, sure.
I think this is going to affect more than several students here. An international student came to Canada in 2021. They were meant to come in 2020. However, because of COVID, they were not able to come in. But they do have a T2202 for 2020. Should they file or not?
I would not. No, I mean they never really came to the country, right? I mean they never came into Canada, so they weren't physically in the country. To me, no, there's no 2020 return in that case. There just isn't.
But can they use the tuition fees or accumulate the tuition fees?
I doubt it. Unless they could prove that they were physically in the country. I don't think they can. That's just my opinion, at least. I don't believe they would.
Okay. All right. So thank you very much, Jerry.
Thank you, everybody, for attending.
We're going to have another Facebook Live before the end of the tax season.
Maybe we could ask the questions. Maybe we could ask the question. We'll do a little survey on Facebook and see if anybody wants us to do one just before or maybe on the filing deadline. So we'll see. So okay, I lost Ida there. So we're probably going to post something there. So again, everybody, thank you very much for attending. If you guys want us to do another Facebook Live, we'll put a survey on there and go ahead and answer. And if we get a lot of answers, we'll certainly do one just before the deadline date. So thank you, everybody, for attending. Have yourselves a great day. Stay safe, everybody. Take care.